with former chairman of the NASDAQ and father of the Jobs Act, David Weild IV.
Thank you.
Welcome, David. It's a pleasure to have you here tonight. Tell us a little bit about the Jobs Act and how that relates to the crypto markets.
Well, First Lady, I want to say thank you for having me. It's really a very happening place up here at 2307 Broadway. The Blockchain Center, engineers, people doing really creative sorts of things. You know, the best nerds in New York. You know, for those of us that like this sort of thing. But you asked me about the Jobs Act, and,
yes.
Well, look, I mean, we got a lot more work to do. I mean, it really gave birth to a set of things that are really helping to enable entrepreneurs to raise capital, not the least of which was the repeal of the prohibition against general solicitation in private placements, 506C, which allows people to finally advertise to bring in private capital to accredited investors. Was something that actually came from a paper we wrote back in prior to the Jobs Act called A Wake-Up Call for America, that had identified this massive drop-off because of market structure changes in the initial public offering market, and motivated people in Congress to start to try and figure out ways to get competitive. But it also gave birth to Regulation A+, which is sort of a form of IPO light, and people are making good use of that. Emerging growth companies, testing the waters, which SEC Chair Jay Clayton recently made available to the entire universe of public companies. So, you know, but I think that, you know, as I like to say, I don't want to declare victory. I'm a passionate economic activist. I believe in upward mobility and changing flows of capital into places that need it. So I like to do an opportunity zones on steroids. By the way, the Jobs Act also gave birth to crowdfunding, right? And
which is huge and leads us right into how this is affecting the digital asset world.
Well, absolutely. It's one of the tools in the toolkit of people trying to raise money. And I know that the SEC chair is trying to take the cap on Reg CF, which is Reg crowdfunding, from $1 million up to $5 million, which ironically is where we started. With $5 million back when the legislation was first proposed, but people were concerned that going out to public investors in an early stage company might not be the right thing to do. I've always believed that, look, you know, you got to take the gloves off, you got to take a little bit of risk if you want to get the economy going. Right. Smaller companies don't do a lot of damage to the economy broadly. I mean, if you had one Apple computer blow up, it's going to take a lot of people with it, right, in terms of their finances. But $5 million financings is just the kind of the seed that you need to plant to be able to get the economy to sprout. And
to introduce being able to invest to the everyday average American.
That's right. It's a cultural shift, right? And I want to see participation. I want people back to where we were 20 years ago, where we were talking stocks and talking companies. It changes the mindset. It engages people entrepreneurially.
Yeah, exactly. Entrepreneurs. I think that's what's so great about America. It is the country of entrepreneurship. So the Jobs Act is obviously so important for entrepreneurs. And again, leading back into everybody being able to have a piece of the pie. Bitcoin does that. I think that was one of the foundations of its use case when it was created.
Well, a couple of things. I mean, we run an investment bank now, which is a completely revolutionary idea, which is to be able to support people remotely, which COVID is our time because people now realize they don't want to be all in Times Square working in a major office building. Right. So we have people that we're supporting in 17 states already in the District of Columbia, also overseas. So the idea is to allow people to collaborate and fill that void in the middle market, which was lost when they collapsed IPO markets. They also collapsed middle market firms and to start to bring capital flows back. But we also have, a number of years ago, I spoke at the 50th anniversary of Martin Luther King's March on Washington. A friend of mine, Bishop Rodney Sampson, who wrote a book called Kingonomics.
That's incredible.
And one of the things that I noticed is that there are many young kids that came from the historically black colleges in the United States who are really, really enthused about crowdfunding as a way to start, start businesses.
Right.
And one of the things that I'd love to see solved on the public policy side is to create tax credits to invest in the businesses of people that don't have money, because many small businesses get started in this country through friends and family. We all know that.
Right.
But if your friends and family are poor, right, it's very hard to get something started. So we have to kind of break the back of that challenge so that we can give truth to the old American dream for everybody. And so that's a real kind of interest of ours. I mean, we're gonna get back to doing public policy pieces, so that hopefully we can work with people on both sides of the aisle down in Washington and try and finance, get more capital into the entrepreneurial set.
And just to wrap it up, I want to ask you, what are your personal investments in the blockchain sector?
Well, first of all, I don't do direct investment. I'm so busy working on deals, and we're doing some really kind of amazing things in the blockchain space. I sit on the board of directors of a company called INX, which is run by some Israelis. They filed an F-1. It's the first one approved by the Securities and Exchange Commission to issue a token publicly. But they're also now, they went through a process of saying, we want to go through the front door of regulation, and we want to set up exchanges or ATSs in all the different areas, including crypto, that are registered, right? So completely legal, registered, the derivatives area, and also the crypto area. And so what they've found is, or tokens as securities. And so what they found in each of the three buckets is that the regulators are asking them to basically set up entities that reflect their jurisdiction. So the SEC would do tokens as securities, the CFTC would do derivatives, options, and ultimately you'd need a currency license to be able to do the traditional crypto. But what I will tell you about crypto right now, because it's where most of the trading action is that most crypto is not fiat currency, right? So it really depends, just like anything else, on the basis of supply and demand. Do you like it? And what's going to drive it higher? Because if more people like it and want it, it will go higher. I think we're still in the early adoption phases, right? So while I don't want to give people investment advice, check with your counselors, if you will. There's the
not financial advice.
But I do think that there's the institutional money, for the most part, is still on the sidelines because of the lack of custody and protections. There's always a risk that if you have Bitcoin on a computer that you can lose it, right? And there's no mechanism right now to get it replaced. And so custody is going to be absolutely critical for the big money to come in. And I think that there are a lot of people, including a friend of mine who's up at Fidelity, works for Abigail Johnson. Tom Jessup's been working on this. The State Street's been working on it. So I think that there are solutions that are going to come down the pike. And I think that what the institutional community wants is they want big, credible names that they trust and they know and they love, that they can go to their institutional investors, their family offices, and say, we're working with people that we've worked with before. And at that point, if they have a custody solution, my guess is you're going to start to see more institutional money come in. And again, back to the supply and demand question, you got more demand. That should drive the value of most crypto assets up again. The other thing that's interesting is because of the restricted supply, like on Bitcoin, I'll just say, right, you're in an inflationary environment now because of COVID. The government's printing money. Right. So, you've seen some better action in Bitcoin recently, and I think that a lot of that is just because, people are concerned that in order to get, the country back to business and keep people employed, that we've got to be, printing money. I think the government's doing the right thing because there's a lot of people that are really suffering right now. Right. But I do think that from an inflationary perspective, it has the potential to debase the dollar, and in that environment, things like Bitcoin probably do pretty well.
So it's interesting, and this will be the last question to wrap up this interview, but about 50 years ago, gold was roughly $300.
Right.
Now we're looking at around 2,000.
Right.
So when people look at that, sometimes they think that gold is now more valuable. But what really is happening is that the dollar is getting less valuable. Do you think that what's happening right now with the printing of money will be the right thing in 5 or 10 years for the American economy?
Yeah, well, look, I don't think you have a choice. I mean, there's the human piece of it, right? You know, people got to pay their rent. They got to put food on the table, you know? So I think it's very definitely the job of government to provide relief. And, you know, there was I don't know if it was Ronald Reagan that said that, you know, if somebody loses a job, it's a recession, but if it's you that loses a job, it's a depression. And I think that people really need to kind of understand that and be really empathetic and try and support people so that we come out. We know that COVID is going to run its course. It's just a question of when. There's a lot of people working on a lot of drugs and vaccines and so on. And so, you know, the mortality rate is coming down. We're kind of getting better with it. We got to get a lot better going forward, but at some point it'll run its course, and we're going to be back in business, I think. And but you can't let people be out on the street. I mean, you know, right? That's just not acceptable in a morally, you know, based country. I mean, it's just unacceptable. I mean, I wish they would do more, frankly. I think that you can't underestimate the amount of hardship that's out there. They've done
by giving everyone a flat.
Yeah, I mean, come on. They're squabbling over trying to get a bill done. And look, I mean, you know, $600 in unemployment is not a lot of money. And
not in New York City.
And certainly not in New York City. And I think wish they'd, you know, cut the nonsense and give people their $600 and get on with life. I mean, and I understand the argument that if you're getting it, you're, you know, that if they give you less, you're more apt to be motivated to get a job. But, you know, let's face it, you know, you look at the streets of New York, you look at the restaurants, a lot of these restaurants are closed down. You got a lot of workers that are, you know, that are out of work, and it's going to be a while before those jobs open up again.
Right.
And I think they need to do something and be.
It's interesting because I think this has also been a time of reflection for everyone around the world as we are with ourselves more at home. And for those possibly who lost their job, I think we're looking inside and saying, well, what value do I bring to the table? Do I need to go be a waitress at a restaurant? Or what's valuable that I have that people might find interesting or want to invest in me? Which is amazing for things like self-tokenization, which could be a future reality that we live in.
Well, with athletes and things, you know, the future earnings. I mean, we were just talking to a gentleman who is from the Dominican Republic, and you know, there are people that encourage and support young baseball players, and they take a piece of their future earnings and that farm team. And I think that, you know, there's always a chance as a professional athlete, and I work with some where, you know, you get injured and you're out of a career, and so people will make a decision about, you know, they'll evaluate what your future earnings potential is, and they may be able to then monetize a portion of that up front as value. So you're going to see, that's the wonderful thing about, you know, tokenization in general, is I think you're going to see a lot of innovation around securities. There's going to be a lot of crazy stuff that gets done, and there's going to be a lot of smart stuff that gets done. But I mean, the beauty of tokens, for instance, is I could pay a distribution on an hourly basis, which I can't realistically do with a stock. Right? And that has value to people, or at least on a weekly basis, because they live, particularly if they're retired, they live on a weekly basis, and it's not, you eat up in transactional costs so much money paying things at a more frequent rate. But with tokens, it's just bits and bytes, right? So it's horribly efficient.
Phenomenal for anyone to be able to potentially earn or buy a piece of it. Anyone can. With the dollar, you can own a piece of Bitcoin.
It makes it more cost effective to democratize access to certain kinds of investments. So we're in the very early innings. There's a great cliche, which is that people overestimate the impact of technology over the short run and underestimate the impact of that technology over the long run. And there's no question that blockchain is going to be very transformative to business. I mean, we didn't talk, but some of the applications that I love is, you know, when you look at the immutable block and just the inability to kind of to muck with the information, you know, it gives you a history of where things have gone. So whether you're talking about chain of ownership in real estate, a lot of that the title stuff is going to get automated and put on the block.
Right.
If you're looking
cutting out the intermediaries.
Yeah, that's exactly right. And if you look at the ingredients chain in pharmaceutical production, because there's a real counterfeit problem, it'll help to eliminate. So important, because then people know that the pharmaceuticals that they get are the real thing, and they're efficacious. You go through one of my favorite applications is this notion that that on crates of lettuce, we'll be able to track it all the way back to the farm that it came from. Well, why is that important? Because if we have an E. coli breakout, we know where the origin is. We can hit a button. We know exactly where it came from. You can do this on shipping crates and start to cut down counterfeiting. So there's a lot of value to the applications. Right now, we're thinking about crypto. And then we'll think about derivatives. Then we'll think about tokenization of securities, which involves many more regulators and disclosure. But we are in for the next decade. There's going to be an awful lot of innovation, and it'll get to the point where people don't even think about, is it on the block or not? They'll just accept the fact that it is. Well, they will not even assume. They won't even realize it. It'll just work. You don't think about the internet anymore, right? You just go on. You get your phone. Boom, you're on the internet, on Wi-Fi. You take it for granted, and that's where the blockchain's going.
Amazing. Well, thank you so much. Yeah. It was an absolute pleasure having you here tonight. And this Thursday at 8 p.m. there is a deep dive into the tech of Divvy and Zap. So be sure to check that out.